Welcome back, and we start off with the Bank of Canada, which has reduced its growth projections for 2025 and 2026, citing the effects of government policies aimed at limiting population growth. The revised forecasts, part of the bank's quarterly monetary policy report, predict 1.8% growth for both years, down from earlier forecasts of 2.1% for 2025 and 2.3% for 2026. Inflation is expected to rise slightly in 2025 to 2.3%. compared to the earlier forecast of 2.2%, largely due to lower excess supply, stronger oil prices, and higher import costs tied to a weaker Canadian dollar. Inflation in 2026 is anticipated to average 2.1%, up from 2%. The Australian Bureau of Statistics showed that the Consumer Price Index rose at its lowest pace in nearly 4 years, with the annual inflation dropping to 2.4% in Q4, within the Reserve Australia's target range. Core inflation also eased, driven by lower costs. Market now price in an 80% chance of a 25 basis point rate cut to 4.1% at the Reserve Bank of Australia's February 18 meeting, the first easing since the pandemic. The Australian dollar fell 0.3% on the data, while bonds rallied. Survey data by market research group GfK and the Nuremberg Institute for Market Decisions has shown that Germany's consumer sentiment is set to decline in February, with growing pessimism over the economy and household income. The index fell to 22.4 points, down from 21.4 in January, defying expectations of an improvement. Analysts warn of no clear recovery in sight as rising inflation and job concerns weigh on sentiment. Major companies have announced job cuts in recent months. Europe's largest economy shrank for a second consecutive year in 2024, with weak private consumption adding to economic woes. Norway's $1.8 trillion sovereign wealth fund, the world's largest, reported a record annual profit of 2.51 trillion crowns in 2024, fueled by a surge in U.S. tech stocks. The fund's top holdings included Apple, Microsoft, and Nvidia, with equity investments returning 18% for the year. Despite the strong performance, returns lagged slightly behind its benchmark index. At year-end, 71.4% of assets were in equities, while investments in bonds, real estate, and renewable energy saw declines. Ghana has officially signed a memorandum of understanding with its official creditors, formalizing a debt restructuring agreement made last year. This move marks a key step in the country's ongoing debt restructuring process, following its default on most external debt in December 2022. The deal, reached with the Official Creditor Committee in June 2024, provides significant relief on Ghana's debt servicing obligations under its IMF loan program. Ghana is still in talks with commercial creditors to finalize additional restructuring agreements. Moving on to the United States, trade deficit in goods surged in a record high in December, rising 18% to $122.1 billion as businesses rushed to import supplies ahead of expected tariffs from President Donald Trump's administration. The increase in imports alongside a drop in exports raises concerns about a sharper slowdown in the growth of the fourth quarter. Inventories at wholesalers and retailers were drawn down, exacerbating the economic strain. Economists had previously forecast a 2.6% GDP growth rate, but the record trade gap adds uncertainty. With tariffs on Canada, Mexico, and China looming, trade is expected to continue impacting growth. U.S. President Donald Trump is sticking to his February 1st deadline for imposing tariffs on Canada and Mexico, citing border security and drug issues. White House spokeswoman Caroline Leavitt confirmed that the 25% tariffs on imports from Mexico and Canada, along with a 10% tariff on Chinese goods, are still on track. The trade moves aimed at addressing illegal immigration and fentanyl trafficking could disrupt over $2 trillion in annual trade with these nations, with the auto industry among the hardest hit. The U.S. Federal Reserve is expected to keep interest rates unchanged on Wednesday as it assesses inflation, job data, and the economic impact of President Donald Trump's new policies before considering further rate cuts. Since taking office for a second term on January the 20th, Trump has issued executive orders, including a federal spending freeze and threatened 25% tariffs on Mexican and Canadian imports. Despite expectations for rate cuts later this year, the Fed remains cautious, awaiting clearer signals on inflation's return to the 2% target. A federal judge temporarily blocked President Trump's directive to freeze hundreds of billions in federal aid, sparking widespread confusion and concern. The freeze, intended to affect various federal programs, was halted by U.S. District Judge Lauren Ali-Khan, who cited the potential devastation to critical programs. Advocacy groups argued that it would disrupt services in healthcare, education, and infrastructure, while the White House asserted that vital programs like Social Security and Medicare would remain unaffected. Democratic lawmakers condemned the move as unconstitutional.